What happens when America's closest economic partner decides it has had enough? The United States and Canada are heading into another major trade confrontation. President Donald Trump has imposed 50% tariffs on around $20 billion worth of Canadian goods. And Canada is preparing to hit back, dollar for dollar. Canadian Prime Minister Mark Carney says the new retaliatory tariffs will begin on September 8th. So is this just another tariff dispute? Or are we watching the beginning of a much bigger economic and political rupture between two of North America's closest allies? And most importantly, who actually pays the price? The latest escalation follows the collapse of intense trade negotiations between Washington and Ottawa. According to Carney, the United States introduced new conditions at the final stage of negotiations that Canada considered unacceptable. Ottawa says Washington wanted restrictions on Canada's ability to negotiate future trade agreements with other countries. Canada also objected to demands that it said touched on issues including the French language and Quebec culture. Carney's message was blunt. The United States, he argued, was asking for too much, while offering too little. The negotiations then collapsed, and Washington moved ahead with new tariffs. Trump, meanwhile, accused Canada of unfair trade practices and again attacked the idea that Canada should receive economic benefits without accepting deeper integration with the United States. The rhetoric has become increasingly personal, but the economic consequences could be very real. The new American tariffs cover more than 500 categories of Canadian products. That includes alcohol, dairy products, technology, sports equipment, furniture, wood products, clothing, cosmetics, and seasonal goods. Even some products that previously benefited from protection under the USMCA trade agreement are now being targeted. And this is happening on top of existing US tariffs affecting major sectors including steel, lumber, and automobiles. For Canadian exporters, that creates a serious problem. A 50% tariff can make a product dramatically more expensive in the American market. And when the price goes up, American buyers may simply look somewhere else. That means Canadian businesses could lose market share. Ottawa isn't simply accepting the pressure. Carney has announced a dollar-for-dollar retaliation. Beginning September 8th, Canada plans to target selected American products including steel, dairy, appliances, farm equipment, pulp and paper, and electronics. The message from Ottawa is clear. If Washington imposes economic pain on Canada, Canada is prepared to impose economic pain on the United States. But here's the problem. A tariff war rarely produces a clean winner. Canada is clearly vulnerable. The United States is Canada's overwhelmingly dominant export market. Around 73% of Canadian exports go to the United States, according to data cited in the Al Jazeera report. That means Canada cannot easily replace American demand overnight. Canadian companies could face falling sales, consumers could face higher prices, and businesses that depend heavily on cross-border trade could come under severe pressure. Some smaller companies could even struggle to survive. But the United States isn't immune either. Tariffs are ultimately paid within the importing economy, meaning American businesses and consumers can also face higher costs. A Canadian product that suddenly becomes 50% more expensive doesn't simply hurt Canada. It can also hurt the American company buying that product, and eventually the American consumer. And there is another dimension to this conflict: politics. The United States is approaching the 2026 midterm elections. Critics argue that Trump's tariff strategy could become politically dangerous if higher import costs translate into higher prices for American households. Business groups have already warned that tariffs can increase costs for companies and families. And economists have repeatedly pointed to the inflationary risk of broad tariffs. So the political calculation is complicated. Trump wants tariffs to strengthen American industry and pressure trading partners. But if consumers instead see higher prices, businesses see higher costs, and manufacturers face supply disruptions, the policy could become a political liability. For Canada, however, this crisis could also become an opportunity. Carney has been pushing Canada to diversify its trade relationships. That means looking toward Europe, Asia, and other international markets. The objective is straightforward: reduce Canada's dependence on the United States. But that is much easier said than done. The American market is enormous, and replacing such a massive trading relationship would take years, not months. So Canada faces a difficult balancing act. It wants to defend its sovereignty and bargaining position, but it also cannot afford to completely sever its most important economic relationship. And that brings us to the biggest question: is this really a trade war? Or is it the beginning of a fundamental restructuring of the US-Canada relationship? For decades, the two countries built one of the world's most integrated economic partnerships. Now, tariffs, retaliation, and political distrust are putting that relationship under unprecedented pressure. The United States has enormous economic leverage. Canada has the ability to retaliate, but also has much greater dependence on the American market. So both sides have something to lose. And ultimately, the people who may feel the consequences first are not presidents or prime ministers. They are businesses, workers, farmers, and consumers on both sides of the border. The question now is whether Washington and Ottawa return to the negotiating table, or allow this tit-for-tat tariff battle to become a much larger economic conflict.